Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today we cannot not address the headline news that is all over the place, which is Elon Musk proposes to sell 10% of his Tesla shares in an attempt to address some of the noise going on lately with taxing unrealized capital gain. Let's take a look at both the merits of this proposal, the economics of the proposal, as well as why Elon Musk made that proposal. Additionally, toward the end of the video, we will also take a look at technical analysis to see where the stock might fall if it does fall as the result of this tweet. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. So as you guys all know, on Twitter, Elon Musk proposed that he'd sell 10% of his Tesla shares in an attempt to address the noise around the taxing of billionaires on unrealized gains. He proceeded with a poll on Twitter and said that he will abide by the results of the poll. I'm personally appalled that he would make a financial decision that is worth billions of dollars based on a Twitter poll, but that is his money at the end of the day. Currently, the poll is at 58% in favor of selling at the time of this recording and 42% against. It will likely close around that percentage, which means that he would very likely, if not certainly, sell 10% of his stock, given the majority supporting it. Aside from the fact that his CPA and some shareholders would be very angry about this, let's take a look at why he makes this move, and let's take a look at the economics and the implications of his decision. So first, let's explore the why by a process of elimination. So we are in November. There is no tax due for an individual or trust at this point, whether quarterly estimates or annual tax payment. As you can see, for an individual or trust, the estimates are usually due on April 15, July 15, October 15, and January 15. So he would not need to sell because of an immediate tax liability that is due imminently. Elon indicated that he does not have income or bonus, and assuming his unrealized gains is coming from his Tesla stock, then he would not have any tax liability whatsoever. Taxable event occurs when you have income of any kind or capital gain, whether short-term or long-term. It does not seem like he has either. So by selling 10% of his stock, he actually single-handedly triggers a realizable and therefore a taxable event. This is also a long-term capital gain because chances are he would have held his shares for more than 1 year. So he would be subject to a capital gain tax rate of 20%. So let's look at the economics. Say he sells 23 million shares, which is 10% of his 227 million shares roughly, at $1,200. That is 27.6 billion in proceeds. If he exercised them at any point in the past, say $100 a share, then the gain would be approximately on $1,100 per share times 23 million shares. So total gain would be 25.3 billion. So round number 25 billion. At 20% capital gain tax rate, he'd pay about 5 billion in tax. That's a great chunk of money for the IRS. Great. But what about the $20 billion that Elon just created by selling his shares? Did he want to use the proceeds to exercise the options he was awarded as part of the 2018 CEO Performance Award? Well, he was awarded about 101 million options with 12 tranche and 10-year vesting schedule. But even though by now he should have quite a few tranches vested since the company has met the market cap requirement and a bunch of operational milestones, there were no mentioning when these options will expire. So we are in the middle of November. I don't think he has any imminent need to sell the stock just to exercise the options because the options has not expired. So I would rule out the fact that he needs the cash to exercise his options. He can always borrow money to exercise options and sell just a tiny fraction of his shares to pay interest. Any bank in America would want to do business with him if he has the need to borrow money. On tax on capital gains, I think it will not happen because it would be an administrative nightmare. How is the government going to track the stock movement? How are brokerage firms going to issue 1099 if the stock fluctuates, right? Unrealized gain change by the hour, if not the minute, based on the stock price movement. And the fact that historically it hasn't been taxed upon is there's no way to know if that gain is permanent or not. Tax is based on income and gains, which is the creation of wealth. Unrealized gain to me is not real gain. Tesla stock could crash tomorrow down to 500, and a bunch of people that bought it at $1,000 thinking they're sitting on $200 per share gain, all of them would have $500 in loss, right? So the concept of unrealized gain is not true wealth creation until you sell that stock and trigger a realizable event. So taxing on unrealized gain is not only an administrative nightmare, also very bad policy because it encouraged people to sell stock in order to pay the tax obligation. It's a noble idea. And it triggers a lot of discussion. If Elon really wants to pay tax, why doesn't he just quietly sell his shares and use the proceed to pay for tax? Although the tax is uncalled for and is not immediately due, but he can easily, quietly sell his shares. Why would he have to announce on Twitter and make decisions based on a poll by strangers? It's very strange to me that he does that. We know that Elon, though, is not the type that shows off his wealth, right? He would join any good cause. On the other hand, his move to Texas also does not signify to me that he wants to pay tax for the betterment of society. You look at Jeff Bezos and Bill Gates. They all have foundations for a reason, right? So they want to channel their wealth into something into an organization that could direct the use of those funds and not pay tax. So I'm not sure why Elon would make such an announcement. Billionaires and millionaires move away from California into Texas for a number of reasons, and one of them is state taxes. And also, Texas is a very business friendly environment. The fact that Elon moved to Texas signifies that he wants to capitalize on that opportunity, keep a little bit more wealth in order to invest in future avenues, in future opportunities, including his SpaceX and a bunch of other companies, right? So why would he decide to pay federal tax now, completely uncalled for and undue? So knowing Musk, however, I think he is creating a opportunity for retail investor. He is gifting us with an opportunity to buy shares at a low price. That is the only possible reason in my mind after running through all these scenarios. A stock split will take a while to finalize. Meanwhile, every Monday represents an opportunity for another gamma squeeze that can push the stock higher from here on out. Also, from here on out, there are just so much good news ahead of Tesla. You got Shanghai, Austin, Berlin, Model S and X Plaid, Q4 delivery, Q4 earnings, not to mention the imminent collapse of any ICE vehicle manufacturers and or Tesla competitors for EVs. So between all the upcoming good news and the gamma squeeze and the institutional investors realize what a great opportunity Tesla is, I think that the chance of the stock moving down is very low. So Elon probably artificially creates such an opportunity. But if you look at the merits of the proposal here, it does not change Tesla's fundamental. It does not change Elon's mental and intellectual capacity to manage the company. It does not change anything. All it does is to add to the market about 23 million shares that will be scooped up within seconds. So I fail to see how this would sustain a long-term crash in Tesla. As a matter of fact, I think we will create a gap down in the morning and probably will very likely close the gap and continue to go up, just like the Hearst contract news the other day. That said, if Tesla continues to go down based on this news, then all the better. I do think this is a wonderful opportunity to buy the dip. Let's see how many days and how many weeks Tesla will be moving down in order for us to capitalize on this opportunity. So with that in mind, let's take a look at chart and see how bad the stock can dip, and whether there is an opportunity to buy not only shares but also leap call options. So let's take a look at the daily chart here. The last 2 days of last week, Thursday and Friday, Tesla seems to be consolidating right above the upper end of my hourly bull flag. So after breaking out the first day of the week, Tesla gapped down on Tuesday based on Hearst news, and then filled the gap and retraced back. But then on Wednesday, it made it all back. Seemingly nothing happened on Wednesday. Thursday and Friday was consolidation day. If I did not hear about Elon's tweet, I would likely say that this is consolidation for another bullish run. In fact, I was ready to prepare another video to signify a major bullish run coming. But with the tweet from Elon Musk, we have to pause a little bit and see how the market reacts to that tomorrow, Monday. The old saying of show me the chart and I'll tell you the news is not necessarily correct here, because the chart shows me a very bullish pattern, but the news that came out after this was pretty bearish for Tesla. Bearish for the price action, although I don't think that Tesla fundamental changed one bit. So if Tesla does dip, that means that Elon Musk just created an opportunity for all of us to buy. The question is, what is the optimal point to buy? Because you cannot easily foresee the bottom when it does fall. As far as support, let's take a look at the hourly chart first. So on the hourly chart, we have 3 pivot points. The upper end of the pivot point will be 12.55. The middle pivot point is 12.23, which is essentially flat from Friday close. And the bottom pivot point is 12.06. I don't think Tesla necessarily a buy pivot points when it does run in either direction. We've seen that in the past. So I would kind of look at these pivot points for reference. I don't necessarily think that Tesla will maintain it at all. That said, I want to share that the first support point here, I would use the pivot point would be 12.06. If Tesla gaps down below 12.06, then I think that Tesla will attempt to move back up and reach 12.06, and then decide whether it want to go all the way up to 12.22 or not. Now, there is a possibility that Tesla opens with a gap down, close the gap, and continue to go up all the way to the moon or to 12.56, ending today over $30 above Friday. It's probably not likely to be the scenario here, but it is entirely possible. If people can look past the fact that Elon selling 10% does not mean anything in terms of company's fundamental, does not affect his ability to lead Tesla. This is simply just an opportunity for retail investor to enter Tesla shares. I think that at any point in time, Tesla would bounce. So I really would capitalize on the volatility as a trader, but as a shareholder, I would not sell one share. For trading, let's take a look at the 30-minute chart to get to a lower time frame. See consolidation with a possibility of a spike up from a technical standpoint here. So if I didn't hear the news, I would be saying Tesla should hit 12.50, if not 12.76 on Monday. But given the news, let's wait until pre-market to see what Tesla will do. My guess is that Tesla would probably have pre-market right below 12.06 here, creating about a $15 to $20 gap. And then when it opens, it could spike up, close the gap, and then move back down. When Tesla hit 12.16 or 12.23, that could be a potential opportunity to short if you want to trade short term. However, being a bull in Tesla, that would not be my trade. I would see if Tesla opens in the deep red, meaning that if it has about $40 to $50 gap down, just like the Hearst news and contract last week, I would take a call on Tesla, wait until Tesla close to closing the gap, and then take off that trade. Now, if Tesla moved down consistently for the next few days and get to 1044, that is an opportunity to enter a call option. If Tesla, for whatever reason, fall below 1,000, remember the gap that I mentioned at 909, and a lot of you asked me about this gap. If Tesla happens to fill this gap, thereby losing all of the gain that created in the last few weeks, I would load up on leap call options here, because there's no reason the Tesla would go back down here, because there's no reason the Tesla is not worth 1,200 if not more. So if Tesla goes down to 909 and fill the gap from a technical standpoint, probably unlikely at this point, but if it does, that is a great opportunity for a leap call option. 1044 is also a good opportunity for a call option, or even 949. That's also a good opportunity for a call option. So overall, I think that there are various opportunities to the upside, assuming Tesla stock moves down. And I would very much like for it to move down in the short term, hopefully a few days, and then start turning back up. So we'll see how that goes. Thank you very much for listening thus far, and I hope you find the information helpful. Until the next video, bye.